In this video, I'm going to be discussing a very powerful topic with you. Like I promised that I'm going to be doing separate videos where I'm going to now show you in-depthly how to trade the different types of ways. So today we are going to be looking at how to trade, how to trade the weekly impulse wave like a pro. Now, this is what we want to look at. And of course, if you are familiar with this channel, I've said it that we have quite a number of checklists that we consider. And of course, our key checklist so that you can have idea of what we do when we get to our technical analysis. Knowing fully well that the trading system at Potential Miners International is a three-wing trading system where we analyze the fundamentals, we analyze the sentiment, and we analyze the technical. So the fundamental analysis is what we do when we are trying to identify assets to trade. Then we now move to the sentiment analysis, and that is where we optimize the choice of assets that we have identified under the fundamental analysis. And under the sentiment analysis, this is where we actually look at the motivation behind cash flow or capital flow in this context now. So where is capital flowing into and where is capital flowing out of? So after we have done all of this, we now have a currency pair or an asset to trade. We will now get to the technical analysis. This is where we now begin to consider the checklist that I'm about to be discussing with you now. But the focal point of this discussion or this video is to show you how do you trade the weekly impulse wave like a professional. So the checklist, when we get to technical analysis, we want to identify what is our directional bias. Directional bias. This is the first thing we consider. Then we want to ask ourselves, what is the market orientation? Market orientation. Then we want to now do what we call top-down wave analysis. Wave analysis. This is very important. Then we'll now launch into identifying the tradable wave. Identify identify a tradable wave. Now, once you now identify a weekly wave to be your tradable wave, you now dive deep into the weekly analysis. Now, how to trade the impulse wave, that is weekly impulse wave. Then I'm going to be showing you very quickly. But before I go into the chart, I want to just give you an idea on a theoretical level what I mean by a weekly impulse wave. Weekly impulse wave means that you are looking at your weekly time frame and you are using the time frame as the anchor chart. So on this channel, I've explained it in our wave related video that we have three types of time frame. Let me quickly run through it in case you have not heard of it. Time frame combo, time frame combo, which means combination. So if you are trading the weekly impulse wave now, on this video or in this video, I'm going to be majorly focusing on the weekly impulse wave. So, and I will now, in subsequent video where I discuss daily impulse wave, how to trade it, I can now show you the time combination of for the daily. So, but for the weekly, your anchor chart is your weekly time frame, weekly time frame. Then the confirmation chart is your daily time frame or daily chart, while your entry chart is your 4 hours time frame. So if you want to trade the weekly impulse wave using the methodology of potential miners or the PMI Global Macro Trading System that we have launched, uh, you want to take cognizance of each of these time frames. So on your weekly chart, that is where you look at the uh, that is where you identify the tradable wave. Remember that I said that the first checklist is you check the directional bias. There is a free gauge that we use to do that. Then you go to the monthly to look at the overall market orientation. That is going to give you idea of the likely or the potential movement of the market on the long run. You want to see where is the market likely going on the long run at a bigger picture level. That's what market orientation shows you. I've explained, I've done a video on each of these concepts. You might need to search for each of these concepts on this channel so that you can really understand what each means. But nevertheless, I'm still going to follow each of these steps to show you uh, on this in this video how to now trade the weekly impulse wave. I want you to follow me very closely now. So having said all of this, if you want to trade the weekly impulsive wave, what it means is that you have, for instance, let's say you have a downward trend. So you have the market is moving downward nicely like this. What weekly impulsive wave means is that you want to take position of uh, any of this wave and you want to ride it. For instance, suppose you want to trade this wave. Let's say this is wave one. Let's say this is wave one. You now want to take position to trade wave one. I mean the second wave, wave two now. This is wave two. This one, wave two, wave two, wave two. And of course, this will now be the third wave, wave three. So suppose you have wave one and wave two already and you want to take position for this wave three, what you will do is that you want to position yourself at this at the beginning of the wave, you know, so that you can join the third wave. Suppose you are interested in training the third wave, you can join the third wave from the beginning of the wave. And that's what I'm going to be showing you in this video. Remember, if you have been following me, that I mentioned quite a number of concepts that you need to take note of, especially when you are at this region of, it's like this is the origin of the uh, wave now, the origin, something like this. So at this level, this is the beginning. So there are things you have to take cognizance of, and I've mentioned them. I've even done separate video for each of these concepts. The first one is what I call money box. I'm going to show you in the context of weekly wave, but I just want you to have idea of quite a number of things that you need to know or to take attention or to put your attention on. The second one is what we call area of emphasis. So this money box is the same thing as area of interest, while area of emphasis is within the area of interest. Then the third thing you will now take cognizance of is what we call the entry box. This is very important. I'm going to be showing you this as we go to the chart. So having said all of this, let's just go right there on the chart so that I can really show you in a real market term what I mean. Um, let's say you want to, let me look for one of, okay, this is gold now. Let's see if we want to, suppose you want to trade gold. Suppose you want to trade gold at this point. Remember that I said that your concern, the first thing you want to do is to check the directional bias of the market or the asset that you have decided to trade. So in this case now, let's assume that you are here at this point Let's assume that you are here, or let me even use the current happening now. You know, don't let me start with what the market is doing at the moment. Currently, let's see if we can trade it. You know, let's see what we can analyze out of this. So at the moment, if you look at the gauge for directional bias, obviously the price is above the cloud. You see, this is the cloud. I've done a video on this free tool and how you can use it to gauge your direction or the direction of the market. You can look, you can search for the video in this channel so that you can understand how to really engage this free tool. And of course, I said if you want this free tool, you can ask me in the comment section. I'm going to send the settings to you. But then, having said all of this, look at this tool now. It's showing us that over since December 2023 or thereabout, gold has been on a directional bias that is upward, which means a bullish directional bias or an up or upward or uptrend directional bias. Now, you have confirmed your directional bias to be a buy. So it means on gold, you will continue to look for only buy opportunities. You will continue to look for only buy opportunity. So at the moment, let's now go to the monthly chart to say what is the orientation of the market as of today. Now, this is the monthly chart, and this is where you want to look at the market orientation. Remember that I said that the essence for doing or looking at or evaluating the market orientation is so that you can uh, project what is the likely long-term movement of the price, or where is the asset going on a long-term basis. Now I want you to look very closely. Suppose you are here at this point and you have analyzed this market orientation to see that you are on a markup. You see, this is your markup. This is your markup orientation. If you have listened to my video on market orientation, you will understand that this is your markup orientation. And you are at this point, given that you already ascertained that the market orientation is on a markup, it means that whatever you are taking as a position or any position you are taking in the market, even on a lower time frame, you already have idea of the larger picture to say that in the next 3 to 4 months or thereabout, gold is going to, move to the upside. So you are rest assured that once your directional bias is telling you to buy and the market orientation is defined, you just have to define your market orientation. If it's a markup, a markdown, an accumulation phase, or a distribution phase. So once you define that, you are relaxed to say that on a bigger picture, I know what the market, this particular asset is going to do. Now, for this case, we are still on a markup. So when you come to your monthly chart, you want to evaluate your market orientation and ascertain what is the orientation. From what you can see from this place, you have this move like this, and it has been moving like that, like that, like that. This is a markup orientation. Now we are expecting that all other things held constant, gold should give us another higher high. You see that this is a high, in continuation of the market orientation, there is a markup, and this is a low, but if this low is higher than this low, so we say this is a higher low. So we are now expecting an higher high or a higher high, as the case may be. Now, having said this, now you just have idea of this. Whatever the market is doing on the lower time frame, from starting from the directional bias, you want to follow it closely. So the market orientation is a markup. Now, the directional bias is a buy. Now, you now want to ask yourself, what is the tradable wave? What wave can I trade? So, if you are to trade a weekly wave, the implication of that is that on the daily, you must ask yourself, is the market structure in favor of the upward direction that I've identified on the weekly? What do I mean? What am I talking about? When you get to your daily now, remember I said that for weekly wave, the anchor chart is your weekly. So look at it now. This is a wave. This is an impulse wave. So currently, we have something uh, that looks like a correction on the weekly. Now, gold currently is experiencing this movement because what is pushing gold now is the fact that there is dollar aversion, because currently the market overview is that we are on a risk on dollar aversion market overview. I'm going to do a separate video where I'm going to explain the four different types of market overview, because this is very important. It's like the risk sentiment overview of the market. It's very important because this is what will determine where capital is flowing into and where capital is flowing out of. Currently, assuming there is no dollar aversion, gold should be correcting big time. But despite that, we are on a risk on. Risk on means that investors, they are ready to put their money on the line. There is a level of stability in the market that investors are ready to engage their money, and of course it means that capital will be flowing away from the safe haven into the high yield currencies. If you go and check Japanese yen now, to a large extent capital has been flowing out of Japanese yen, flowing into AUD, flowing into CAD and New Zealand dollar. But the tone of the market as of now is that there is risk on coated with dollar aversion. And you will remember that gold has been quoted against dollar. So because there is dollar aversion at the moment, there is still likelihood for gold to have a push up, just like what we have now. So suppose you have explained the market, the tone of the market in terms of the risk sentiment. So we now want to trade this impulsive wave that is weekly now. This is the first one that we can see. So even if the market will range, because we have a tone of risk on and dollar aversion, we might likely experience another push up to the upside. However, if dollar begin to gain strength, gold will keep falling. There's going to be a corrective wave move around this place. It might give us something like this. It might give us something like this a bit. Then before the gold can now push up. However, based on what we have now, we are expecting that if dollar keep falling, if the dollar aversion is retained in the market, then it means that gold will still push up a little bit. So having said this, we are to wait for one full week of corrective wave or corrective move now. No, the difference between corrective wave and corrective move. Now, a corrective move is just like you have bullish candle moving upward. You see this bullish candle moving upward, moving upward. A corrective move is the corrective candle that moves opposite of the corresponding bullish move. So this corrective move usually will form the beginning of a corrective wave. Are you getting it now? So when you have an impulsive wave that you have identified, then remember that for this monthly chart, there is a month, 1 month of correction. Are you seeing it now? So if you analyze it from a top-down analysis, you have an impulsive wave, then you have a corrective wave. Now this corrective wave is confirmed by this 1 month of correction. This 1 month of correction. Are you getting it now? So expectedly, all other things held constant, gold might push for the next 3 to 4 months, you know, if dollar aversion, is still ongoing in the market. So there is 1 month of correction. So we have likelihood of the next impulsive wave to push up. Now the same thing we are going to do on the weekly now. On the weekly, we are expecting that given that we have ascertained this 1 week of correction after this impulsive move, I want you to follow closely now. So I'm not using the previous data, I'm analyzing the market based on what we have now. So this is an impulsive move upside to the upside on the weekly, and we have confirmed that our directional bias is a buy. So you wait for one period of correction on the weekly. Are you seeing it now? This whole week you wait. Now the following week you are saying that you can now go to your daily. On your daily, what you are looking for, you see now from here you have you can now begin to analyze the market structure. What you do when you get to the daily chart is that you analyze the market structure. Remember this, don't forget. In fact, you can apply this, what I'm about to say, to your trading strategy if you are not using potential miners trading system. Anytime the market structure is a buy on the daily, you will only be looking for buy. Even if you are trading on a 1 minute, suppose you are a scalper and you are just coming out. I don't know how you do that anyway, but if that is what you do, that is your system, ensure that you analyze the market structure on the daily and confirm that the daily is on a buy. That is when you will be looking for a buy. If the daily is on a sell in terms of the market structure, you will only be looking for a sell. However, in the context of potential miners trading system, we must confirm whether that structure is in alignment with our directional bias. Do you see how you just take a step-by-step analysis, and you don't need to rush yourself to do this? Now, on the daily, if you look closely now, starting from this period that we are expected to analyze the market structure, so you will notice that there is a break of structure around this place, a clear break of structure around this place. Are you seeing it now? A break of structure bullish. Are you seeing it now? So we want to now identify from this break of structure, it means that our market orientation on the monthly is a markup. On the weekly, the directional bias is a buy bias. Now on the daily, the market structure is now in favor of the directional bias. So everything is now aligning. Now on the daily, after you have a break of structure that is in alignment with the directional bias, the origin that created that break of structure forms your money box. You might need to go and listen to my video on the concept of money box. This is your weekly money box. This is your weekly money box now. For short, let me just use WMB for short, weekly money box. Now, this is your money box. I've done a separate video that explains this money box, but for clarity, I'm using this concept now to take trade or to analyze trade on the weekly chart, to trade the weekly impulsive wave. Now, you expect the trade after this break of structure to the upside, you expect the trade or the market to come back into the money box. This money box is what we call area of interest. Are you getting it now? Now, when the market comes back to the weekly money box, remember that for a weekly impulsive wave, weekly chart is your anchor chart, daily chart is your confirmation chart. Confirmation chart, that is where you spot your money box, and we have been able to spot the money box now on the daily. Then you now move to the entry chart. On the entry chart, interestingly, on the entry chart, what you are looking for is, first, what is the area of emphasis? Area of emphasis is, you want to look at the money box. You want to overview the beginning of this move that created the break of structure on the daily. And you want to ask yourself, do you have any break of structure within the money box? If you can look closely, you can see that we have a break of structure around this place. Around this place. A break of structure around this place. This is a break of structure. You see that we have a break of structure around this place. Now, immediately you have that, you can spot that break of structure within the money box. Remember that the money box is the area of interest. Area of interest. Money box, we have liquidity here that we believe that this liquidity should create the impulsive wave that we want to trade. However, when the market trades back into the money box, you are looking for a break of structure within the money box. The origin that created that break of structure will be your area of emphasis. Interestingly, you see, the market is now within the area of emphasis now. So it means that if you can see any engulfing candle from this area of emphasis, that like a bullish candle now that engulf within, whether today or maybe Monday, you can position yourself and take trade from here. Now, this area of emphasis for aggressive traders, they can position themselves here and put their stop loss somewhat below the area of emphasis and target ratio 1 to 5 on the minimum. Ratio 1 to 5 on the minimum. You can still do ratio 1 to 6 if you can refine to get a better entry. However, because at Po ten tial Miners International, we don't trade emotion, we have our checklist. So when the price trade back into the area of emphasis, we want to see that, you see, area of emphasis, remember that area of emphasis is the origin that break a structure within the money box, whether weekly money box or daily money box. Now, when the market trade backs into the area of emphasis, we are expecting that this area of emphasis has a lot of liquidity. And from this area of emphasis, there should be a movement to the upside that will create the impulsive wave that we are expected to trade. So we will not take the trade immediately. We want to observe the market. If truly there is enough of liquidity within the area of emphasis, you see, if the market breaks this area of emphasis and breaks the money box to the downside, it means the market is not ready to give us the impulsive wave. But I want you to take close attention, close attention and observe this trade. Thank God that this is like a live trade now. We don't know what will happen in the market looking forward. We don't need to know. But given the fact that we are applying our trading system to the current market now, and we observe that the price is within the area of emphasis. Area of emphasis is within the money box, remember. So this entire money box, we have liquidity there that should create an impulsive move to the upside. However, this particular area of emphasis has strong tendency to create the impulsive move. So if you observe this market now, today is Friday, I don't know if this market will create an engulfing move today. However, at the opening of the market on Sunday, Monday morning, if you have an engulfing move, which means you have a green candle close above the highest high of this of this bearish candle, which is that's an engulfing candle, that means that the market is ready to start the impulsive wave. This will now be your entry box. Now, we are not sure yet whether the market will generate an engulfing candle. But if by Monday we have an engulfing candle here, close above this particular high of this particular candle, we are going to position for the trade, and we are going to take an average of ratio 1:5, and if we can refine it very well, we take ratio 1:6. Are you seeing it now? That's how we trade at Po ten tial Miners International. Fortunately, this is a live trade. I'm not calling this trade because the condition is not met yet. At Po ten tial Miners International, we don't just enter the market and be looking for what interests our emotion to say that it seems the market is going up. Every condition must be met. Now, the condition that is expected, the last condition for this particular trade, is that this green candle, now you can see that like we have projected, we don't know what will happen. This area of emphasis has liquidity. When the price trade back into it, we are expecting that the liquidity here should push the market up, and this will be the beginning of the impulsive wave. Now, if this particular candle closes above this bearish candle, it means our condition is met. If this candle closes now and it closes above this, or if it does not close above this, if the next candle still close above it, or the next three candle closes above this, immediately you have a close above this, then your entry box will now be from the beginning of this bearish candle, and the stop loss will be below the lowest low of this particular candle. So expectedly, if this trade give us what we are looking for, our trade should be looking like this. So our entry box will be something like this. Maybe you might need to just follow this trade. This is our trading system. You don't know what this market will do, but if the market closes above this particular bearish candle, then this forms our entry box. Then we will now position for this trade around this place. The stop loss will be below this place. Then you can take a ride of ratio 1:5 on the minimum. Ratio 1:5, it will deliver. So this is just like a live trade now, that I'm just fortunate to see this signal now. But then suppose you just want to see how this thing works. I want to go back in retrospect. Let me leave this chart. Let's see, whatever happens, take note on gold. Take note on gold. Today, what is today's date? Today is 25th of July. If this particular candle or the next candle closes above this particular bearish candle, then it means all our conditions are met. Remember, even when your conditions are met, is not a guarantee of the outcome of the trade. But because you have a trading system, and you have a trading system that you have your defined edge, it means you must wait for all the conditions to be met. In the forex market, this market now can from here now begin to nosedive. So if that happens, of course, lucky our condition has not been met. Now, even after our condition is met, we enter the trade expecting that the probability will be in our favor. Are you getting it now? So because if you don't guide your expectation in the market, you will just burn your fingers over and over, and you will regret it. There is no emotion. Our conditions are met. Once this candle closes above this bearish candle, it means that we have an entry box. It is after you have spot your entry box that you can take a trade. And this is how we trade. This is how we trade any currency pair. That's how we trade. I'm going to show you an example of a trade that we took at the platform on GBP JPY so that you will understand. So let me just go to GBP JPY to show you the trade that we took. We are expecting that this trade is going to give us, you know, profit, but currently the trade is still at our entry, and there's no issues with that. I want you to now let's now go back and start the analysis and our checklist now. Checklist. I said if you want to trade the weekly impulsive wave, because of time, I will give you this example and I'll probably now do one more example, maybe on Euro USD or USD CHF, so that you will see how we pick this trade. So, but then let's go now. On weekly chart, you want to check what is the directional bias. And you can see here that the directional bias is a buy. It means you will only be buying on GBP JPY. Remember that you don't just open the market and pick any currency pair of your choice. That is not how we go about it at Potential Miners International. We do our identification protocol, which is fundamental analysis. We move to optimization protocol, which is sentiment analysis. Then we'll now pick currency pair of cross capital flow. This is very important. Your currency pair or your choice of currency pair must be a currency pair that you have ascertained that there is cross capital flow. I've done a video on cross capital flow. You might need to check that video on this channel. Among the videos that you must watch and you must sit on and understand is the video on capital flow. Cross capital flow is like this is the winning edge of any successful forex trader. In fact, some people they don't know that their choice of currency pair automatically, position them almost all the time that there is cross capital flow. They just thought that their strategy is winning. No, until you have a cross capital flow, you will struggle a lot in the market. So if you are picking a currency pair that has cross capital flow, the likelihood of your strategy to work out more than likely is very high. Are you getting it now? So cross capital flow is very important. Now we have picked GBP JPY because we have analyzed it and we have come to a conclusion that as of this week, cross capital flow has been ascertained for GBP JPY. You get it now. So we now check the directional bias. After the directional bias, the next thing you want to check is what is the market orientation. And I want you to look closely now. I have explained this using the previous example. Let's now do this again in case somebody is still confused. If you look at the monthly chart, you will see that to a greater extent, the market has been giving you higher high and higher low. Are you getting it now? Now, we are expecting that the next move on GBP JPY will be a move to the upside. A move to the upside based on market orientation. Remember, this is just the long-term overview of what the market has the likelihood of doing. It doesn't mean you just check the market orientation and start to buy. No. But after you have confirmed your directional bias on the weekly, the price is above the cloud, you know that you are on a buy bias. So it means you are only looking for buy. So you go to the monthly, you check it on the monthly, the directional bias is more of a markup. Markup means uptrend. So given that, you will now identify the wave that you want to trade. The wave that you want to trade. Now we have identified this wave, that this is the wave we want to trade. We have an impulsive wave on the weekly. We have a corrective wave. Remember I said that, when you have an impulsive move on the anchor chart, you want to wait for one period of correction. So this was our impulsive move. I I want you to look closely now. This was our impulsive move. So we waited for one period of correction, and the following week we position. Let's see if we have a trade. I said that when you get to the daily chart, you are looking at market structure. Remember that during the corrective move, there was what looked like a break of structure around this place. A break of structure bearish. You see that now. So I said that if your directional bias is saying buy and the break of structure or the market structure has broken to the downside, you will wait on the until you have a counter break of structure to the upside. And this happened around this place. There was a very, even if you mark this place, it's still a break of structure. If you decide to mark this place, it's still a break of structure to the upside, a break of structure bullish. Are you seeing it now? I want you to pay close attention. This is how we just look at the market. In fact, it's like you just look at the market and observe what it's doing. Are you getting it now? So we have ascertained that the market structure is now in favor of both the market orientation and the directional bias. Market orientation on monthly chart, directional bias on weekly chart. Now the market structure is in favor of these two evaluations that we have done. So it means you will look out for, remember, for a weekly chart, the daily chart is the confirmation chart, and this is where you pinpoint or you spot your money box, and your money box is the origin that created the break of structure on the daily. So this is your money box. Remember, this was how I spotted the money box, the weekly money box for the previous example. This is the money box now. Now you will now go to the entry time frame, which is the 4 hours. Within the money box, you want to identify, do you have a break of structure within the money box? Yes, you have a break of structure. You have a break of structure around this place. You see it now. This is a break of structure. A break of structure to the upside. You see that now. Now you ask yourself, what is the origin that created that break of structure? The origin that created that break of structure is this, and that is what will form your area of emphasis. You see that now. When the market trade back into the area of emphasis, you are expecting that you have an engulfing candle, and this, you see that the market traded back into, this was how we picked the trade for GBP JPY. We are still at the area of entry. You see it now. So the market traded back into the area of emphasis. Then you waited for an engulfing move. You see it now. This particular move closed above this bearish candle now. Then you can now position this will now form your entry box. Entry box. This is the beginning of the entry box. This is the end of the entry box. So this was the entry box that we identified for this trade, entry box. So what I did, because this entry box was a bit wide, if you want to take ratio 1:5, you can just position your trade here, and you expect the market to push up, giving you ratio 1:5, something like this, ratio 1:5. However, at Potential Miners International, because we are confident of what we are doing, we take our time to refine this trade back. So we entered this trade around 198.37. That was where we entered it. And you can see that the market still went a bit down. We entered the trade around 198.37. And our stop loss was around 197.34. This was where we entered the trade from. Currently, the trade has picked us, it has triggered. In fact, it triggered like 2 days ago and it has been hovering around this place. So if this trade, if we eventually fall on the positive side of probability, this trade is expected to give us ratio 1 to 5 on the minimum and ratio 6 based on our PMI target, ratio 1 to 6. This is it. You see it now. This is a current trade. We don't know what the outcome of this trade will look like. It could be a trade that will come and stop us out. It's okay because we have followed all our trading conditions, and it can be a trade that will give us profit. This is how we trade at Potential Miners International. Let me give you one more example. Let's look at USD, Euro USD. Euro USD, maybe, okay. I will take my time to look at, since, okay, let's see. Euro USD. Suppose you want to trade, and I want to use this as an example now. This as an example, I want to let's look at a trade that has happened, because the examples I've been doing, they are current trade, and I think I like that. We're able to pick, it's like I'm calling a live trade. Although this is not an advice that you should enter it, but this is what we have positioned ourselves to take. These are the trades that we have positioned ourselves to take at Potential Miners International based on our conditions. We don't know what the outcome will look like, and whatever the outcome is, we have our risk management in check, and this is how we take trade day in and day out. So now suppose you are here at a point and you want to trade Euro USD, and you have confirmed that this currency pair, Euro USD, is a currency pair that has cross capital flow. You have done your identification protocol, you have done your optimization, you have now decided to trade Euro USD. Now, when you get to the chart, you want to identify an impulsive move. An impulsive move. You see it now. Then you will wait for one period of corrective candle. Let me use that language, corrective candle, so that somebody will understand it better. Corrective candle. It means you will wait for at least one full week of corrective candle. So the following week, you position to trade. However, you need to go to your monthly, just have idea of the market orientation. What is the market orientation? As at this point, you can see that the market was around this place, gave us an impulsive move to this side. This broke this structure. Are you getting me now? Then we have this low that is an higher low. Whether this one or this one is still an higher low. So we expected this to move up, and it has moved up. So the overview of the market orientation is that we are still on what seems more or less like a markup. Are you getting it now? So whether you consider this one to be a range, at least this price has broken above. So you have a low, higher, a high, a higher low. You are looking for, we have gotten higher high. This market is expected to correct like this and move up. Are you getting it now? So, but because on the monthly, what we are looking at is an overview of the market orientation, we have been able to ascertain that our market orientation is more of a markup, which means uptrend. Then our weekly chart, we looked at it, we see that our market is on a bi-directional bias. So you wait for a corrective candle, then the following week you go to the daily. When you get to the daily, you want to look at the market structure. This is what you are looking for on the daily. So you see that there was a break of structure around this place to the downside, break of structure bearish. So you will not do anything until you have a clear break of structure bullish. You still have a break of structure around this place. You see it now. This is how you trade. Now, we now got a break of structure to the upside around this place. You see it now. This is break of structure bullish. I want us to trade this particular impulsive wave. You see this particular impulsive wave, this is what we want to trade. As at the time you are analyzing the market, assume that this has not happened. You don't know what will happen, but you are analyzing the market based on the conditions that we have itemized. So you have a break of structure bullish now. The origin that created that break of structure is your money box. Remember that is on your confirmation chart that you spot your money box. Money box. So this will be your weekly money box now, WMB. And I said that you will wait for the price to trade back into the money box. So you go to the entry time frame. Entry time frame. So in when you get to the entry time frame, I said that within the money box, look for a break of structure within the money box. You can see something that looks like a break of structure within the money box here. Now, this is break of structure inside the money box. Now, the origin that created that break of structure was this one. And this will form your area of emphasis. Do you see the step-by-step way of spotlighting or spotting our trade opportunity? Now, when you get to this place, you might need to go and listen to my video on money box. I said that when the price trade back into the money box, you have two options or two possibilities. It is possible that the price do not trade into the area of emphasis, which means that within the money box, you have a lot of liquidity already. So, but the confirmation will be that the liquidity that pushed the market up could break a structure. You see that there was a break of structure. This was a break of structure. So suppose we saw this trade before it happened, would have taken position like this. Now, suppose this price trade back into the area of emphasis, all you need is an engulfing candle to take a position. But if the market do not trade back into the area of emphasis, it means that within the money box, you have a lot of liquidity already. So immediately you see a break of structure. Even when the market do not trade back into the area of emphasis, you want to take a position. If at PMI we are to enter this trade, although it would not have picked us, because I would have refined this trade to come and pick us around this place. Around this place, just because we are trying to get ratio 1 to 6. Ratio 1 to 6. That's what I would have done. Our entry box will have been somewhere around there because we are trying to refine. Are you getting it now? So I want to, and of course, know that you can't pick all the trades. There are trades that you will just let go. You don't need to struggle. So this market gave us around 1 point ratio 5 to 6.3. Suppose you enter the trade here at the tip of the break of structure because that's where you are expected to enter if you are not refining. Are you getting it now? But at PMI, we refine as possible to get like a sniper entry so that we can get a very nice risk to reward. This is how you position for trade. Now, the reason why we are confident to refine is because even if this trade do not pick us here on the weekly, we are going to still wait for a daily impulse wave and trade it. Because we know that within the 1 week impulsive wave, you have 3 daily waves. So we would have waited for another daily impulsive wave here and still take a trade. So there is no need to rush or to panic. Now, suppose you now want to position yourself for this trade now. Already we are still on a buy directional bias and our market orientation is still a markup. Now, we will now go to the daily. On the daily, do we have a break of structure to the downside? We have something that looks like a break of structure to the downside around this place. So this was a break of structure to the downside. Now, fortunately, we have gotten another counter break of structure to the upside. These are trades that we are probably looking out for against next week, plus or minus if the conditions are met. So it means that we have an origin that we can call our money box. This is our weekly money box now, weekly money box. So we are expecting the market to trade back into this money box. When the market trade back into this money box, let's look at where do we have a break of structure that we can say that this was a break of structure. There was a slight break of structure around this place. Something, a slight break of structure around this place. This was a break of structure to the upside. So the origin that created this is a slight break of structure, notice, but the most obvious break of structure is this one. Are you with me now? So plus or minus, we are expecting the market to come to this zone around this place. This will probably be our area of emphasis. So maybe by next week, if the market trade back here, we'll now wait for, let's see if there's going to be an engulfing move, or if it gets into the money box. If we have a move that breaks the structure, we can position for a weekly impulsive wave on the on Euro USD. So however, at the moment, the conditions are not met. We still have quite a number of conditions to align before we take position. So we are not calling trade here. And of course, I'm not doing this video to call a trade. This is not a live session where I call trade. What I'm trying to do is to explain how do you take weekly impulsive wave like a professional. I want to believe that if you follow me step by step, you should have a clearer understanding of how we trade at Potential Miners International. And this is what we do each time we are looking out for a trade. And of course, you can be rest assured that if you can listen to this video and if possible, rewind it and listen to it over and over, and you understand some of these concepts, if you apply it to your trading system or your strategy, you are going to be a better trader. And I want to encourage you to subscribe to this channel. This is important because I will still be posting subsequent video that will make some of these things clearer to you, and you don't want to miss out on any of the videos that I will be posting. So I want you to subscribe. I want you to hit the notification bell, and of course, uh, you should be expectant of subsequent videos. And I believe that you get value from any video I will upload. Until I see you in the next video, I want to thank you really, 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 really hard. I want to really thank you for listening to me to the end of this video. God bless you in Jesus' name. Thank you. Cheers.